Hey, what's going on, guys? Doing another update of my Robinhood portfolio finally. I know it's been quite some time since I've actually done a full portfolio update for you guys, but just had a lot of growth on the channel recently, which I'm super excited about, and stock market has just had a lot of volatility as well, and I've added to a couple new positions. So really wanted to show you guys all the changes that's been happening in the portfolio here. Getting super duper uber close to that $14,000 mark. So it's going to be another milestone. I believe I reached 13,000 in early September, so just about 1 month to reach the next milestone here. And then we'll be getting even closer to 15,000 once some more deposits get in. So we'll be going over the portfolio here. As you guys know, the stock market's been super volatile. There's been a lot of impeachment talk, which I won't spend too much time giving my opinion about this, but as soon as I heard that the stock market was going down because of impeachment talk, I immediately shifted some money from my bank account into Robinhood, just because I know that's really that short-term white noise, because in order to impeach a president, you would need 2/3 majority of the Senate to vote to impeach Trump, which is not going to happen because the Senate is controlled by Republicans. So there's essentially no way that's going to really happen. So I knew that was all white noise. And then we still have the ongoing trade war talks, which just really has that really gone anywhere this whole year? I don't know, but there's been a lot of volatility in the markets, and it's provided a couple of good buying opportunities. I'll go over the new positions in my portfolio. So going compared to the S&P 500, I am still beating the market just by a couple percentage points here. So the past week, you can see that VU is down 1%. Last month, it's down almost 2%. And then the last 3 months, it's down 1.37%. While I am, in the last month, I am down, but not as much as VU is. And then I'm actually in the green for the last 3 months. And this, of course, doesn't include my higher dividend yield. So let's hopefully continue to beat that S&P 500 return. And this is what I really love about investing in my own stocks here, is that I get to pick and choose what goes into my portfolio. Even though I own a lot of stocks, I get to filter out which ones I really like, and then I get to filter out those ones that I don't think belong in my portfolio. You wouldn't get that type of power if you were just investing in an ETF, which just kind of broadly buys anything in the market. So that's what I really like about picking stocks individually here. Again, guys, really love all the support. Be sure to hit that subscribe button, and let me know what you guys want to see more in the future in the comments. So the first stock we'll be going over today is Pepsi. It's really nice to see that this has really been growing in the last couple months here. I'm up pretty big on this position, 35%. Of course, only own 3 shares. Pepsi, Dividend Aristocrat, very stable position in my portfolio. They make a lot of food and beverage drinks, even ones that don't necessarily explicitly have the Pepsi name on them. Then we have AbbVie here. This is a position I am down on. Actually bought in recently, I think around the $67 mark, but most of my other shares were at its all-time highs here at around the 120 mark. So I've really it's been a uphill battle here for AbbVie, but again, pays a very great dividend here, close to 7%. So that makes waiting it out a lot easier to do. And people are really expecting a lot of growth with AbbVie in the future, and then some people are very pessimistic about its future. So I will be holding on to it for the long term. I'm pretty comfortable with my 4 shares. Don't think I'm going to average down anymore. Only makes up 2% of my portfolio anyway. And the next stock we'll be talking about is Johnson & Johnson here at 133. It's been pretty stagnant here for the past year. It's been in the news a lot lately for various different types of lawsuits, but Johnson & Johnson, a very strong company here. I've had a lot of dividend returns from this. It's known for raising its dividend every year. Just a very large company here at $350 billion market cap. Pharmaceutical company. You don't really need to worry about this going bankrupt anytime soon. And I will continue to hold it for the long-term future. Very staple stock in most people's portfolio. Then we have Pfizer here. This is another stock that's been beaten down a lot in 2019. In the last 3 months, it's down 17%. So I thought it was a good buying opportunity, so I bought a few more shares here. Now I'm down $25 on it, but of course that doesn't include all the dividends I've received on the stock, so not too bad there. Then we have MasterCard, which is one of my better stocks here to hold. I have an average cost of $2.55, makes up a little under 6% of my portfolio. Total return of $56, which is not too bad here. MasterCard just been on a tear in the last 5 years, up 267%. And I really just see a lot of growth going forward with MasterCard, as the rest of the world is still using cash, and there's so many opportunities for MasterCard to grow here. And then very similar company, Visa. Everything I basically echoed about MasterCard can be said about Visa here. It's had insane growth here in the last 5 years, 231%. This is another stock to just own in your portfolio and just continue to see it grow and then pay out a very small dividend, but it's great to have that capital appreciation. We have JP Chase here, only own 3 shares of it. A lot of stocks I only own 3 shares of. Power of 3 there, but of $23, this has been a very volatile stock. I think if I was ever into swing trading, this would be a stock that I would choose to swing trade. Very safe position or stock to hold here. Chase is the largest bank in the world, and it has almost a $400 billion market cap. Has a very nice dividend yield. It actually just recently raised its dividend to 90 cents a share, which is just great because JP Chase has had double-digit dividend increases for a while now. So very glad I own that. And then we have another stock that I recently added to. It's another bank stock, Bank of America. Warren Buffett actually also owns a lot of bank stocks, so I was kind of inspired by him to invest in these sort of companies. Won't always see growth like we've seen in the last 5 years, 63%, but it's going to be a very safe investment, I think, for the foreseeable future and continue to pay me those dividends. Now, this is a stock that's been getting a lot of hate recently. It's ExxonMobil. Really been hit hard here in the last couple months and years. Down 9.5% in the last 3 months. It's at a very attractive dividend yield now I want to say it's about a little over 5%. Just recently been averaging down on this position, but at 4 shares, I think I'm kind of content with this, but I know other people are buying more of this future if ExxonMobil has a bright future ahead of itself here. A lot of people think that as we get closer to using more green energy that we won't need to use oil as much, which I'm not sure if I necessarily agree with. Oil is really that black gold. Then we have another oil company here in RDS Shell. Insane dividend yield, around 7% for this company. Blue chip company here, one of the largest in the world, actually headquartered in the Netherlands, so it's not a US company. We have Microsoft, which do you guys believe that Microsoft made nearly $40 billion in net profit last year, which is absolutely insane. Microsoft has so much software and technology, and just really see a lot of growth for its future, and it's already increased so much in the last 5 years. Their CEO he's really turned around this company and really see more positive signs going headed into the future. As you guys can see, I'm up $222, not including dividends. I might actually add a couple more shares to this position, even if the PE ratio and valuation of the company isn't the greatest. Then we have McDonald's here at $211, down a little bit on this position, but it's hard to get McDonald's on a discount. This is a stock that just continues to go up every year and also raises its dividends. So it's kind of the best of both worlds here. Definitely loving it. Then we have Starbucks at 85. So this is pretty rare to see Starbucks have any sort of correction. So I really am really thinking about adding a couple more shares to this because it's really been hit hard here in the last couple of months here. Was at 1.99, so to see it at 85 looks super attractive. I'm up huge on this position, 37%, average cost of just 62. So definitely considering adding more to Starbucks. We have 3M. This is a stock that I added another share to recently. Once it reached that 155 mark, I thought this is just way too attractive to pass on. So check out the video that Ryan Giffen and I put out. It's actually on his channel, but I go over why I think that 3M still has a positive future ahead of it. Has a lot of patents and a lot of essential tools and different type of equipment that people use in everyday life that I think 3M will still be a player in the future. Down pretty big on this position, but again, pays a very nice dividend. Dividend king, actually. So really looking forward to it for the future. Then we have new residential investment here, NRZ. This is a more of a high risk, high reward stock in terms of its dividend yield. I know Robinhood usually has misleading dividends on here, but this is actually close to accurate. It has a very ridiculous yield of close to 14%. So I actually just got paid a $6 dividend, and it's really nice to have here. Basically get 50 cents a share. So as long as it can continue to maintain doing that, I'm gonna own NRZ. But again, as we head closer toward an imminent recession, they don't really have much of a track record of surviving recessions. It's a relatively newer company, so that's again why it's a riskier investment. Then we have another stock that I actually added another share of. It's Equinix here. Basically is a data center storage company. Provides a lot of the infrastructure that is behind like the servers of different companies on how they applications, and basically all that's connected into Equinix here. So trades at a ridiculous price here, $581, but keep in mind its market cap is only at about just under 50 billion. So even though its share price is very large, the company as a whole isn't super huge. It's not like Intel or something like that where it has $200 billion market cap. So definitely a lot of room to still grow here. I see 52-week high is 609, and then 52-week low is 335. So definitely a large range of where this stock could fall, and analysts really seem to love it. I'm up huge on this position as well, $152. One that I'm definitely bullish about in the future, just because we'll always kind of need places where that data needs to be stored and the infrastructure really needs to be there. Then we have Intel, just mentioned them, $51 a share here. Only makes up about a percentage of my portfolio, and has basically been stagnant ever since I bought it. But again, another core position that I'm comfortable owning for the long term. And we have Procter & Gamble. I think I'm gonna double my investment in this. It's average cost of 77, so it just continues to go up and up. It would be really cool to see 100% return on a particular stock here, but I think Procter & Gamble might be the first one to get there. So P&G, I have another video out on this if you're not familiar with what they produce, but basically they make a lot of household appliances, dishwashing soap, diapers, different essentials that we'll always need. We have Boeing here at $375. This is another stock that's been all over the news, but basically Boeing, just because it has such a high barrier to entry, that's why I feel comfortable owning this for the long term here. And then I'm up on this position right now, but again, this is a stock that just fluctuates so much that it doesn't really matter to me what the price is. It pays a pretty nice dividend, so that's what I'm really more concerned about, and it's also been raising that dividend pretty well here just because it's had so much growth. Then we have Southern Company here. Just continues to do very well for a utilities company at 40%. We have United Health. This is a stock that's just been beaten down, heading in really the wrong direction here, down 18%. But as far as I know, this is almost exclusively because of people being worried about the United States being switched to a single-payer healthcare system, which I guess would be a risk if people were concerned about the upcoming 2020 election, which is coming closer to a reality here. So I guess I can maybe understand the concern. I still think that even if that were to, a lot of things would have to happen. It would have to be a Democrat running for a single-payer healthcare system. That would have to pass basically both houses of Congress. and then it would actually have to be implemented all within like basically a short amount of time. So I think if that really were to happen, we would have more warning signs and more of an opportunity to get out of UNH. It's not going to all happen just at once here. So not really sure if I agree with all this short-term sell-off on UNH. So I own 3 shares. It also pays a very nice dividend. Down big on this position right now. But again, this is a stock that really fluctuates. And I don't expect to be down on that position forever. Then we have FedEx. This is another stock that I've just really have done terrible at. $92 down. I'm glad I only own 1 share. It's down almost 40%. It's going to be tough for FedEx to continue to compete with these bigger companies like Amazon and UPS. But hey, that's what competition is all about. So just continue to hold on to it for the foreseeable future. This is a stock that's had a little bit of a rough time here. I've known the whole railroad industry has been down recently, but CSX, another railroad stock, and then we have Union Pacific. I actually bought another share of this because I thought it was also at a discount here. So down almost 5% in the last week. So that's when I, from owning the stock, I kind of know what it trades at. And they recently raised their dividend, and they actually had a great earnings report. So I knew this is kind of more short-term noise. So I went ahead and bought another share. So now my average cost is closer to $154, and now own 3 shares of it. And we'll own it for the foreseeable future. We have Verizon at $59 there, another stable company. And then we have Store at $38.05. Now, I've been thinking about getting into more crowd-funded real estate, so I may not get into more shares of REITs. But let me know in the comments if you guys are in crowd-funded real estate. Kind of been thinking about it. I know the returns might be a little bit bigger than what REITs provide. But I'm up on this position, $40, 27%. So not too, those crowd-funded real estate returns are great, but I'm not sure if they're at 27% marks. And then we have Apple, just a great company. As long as there's people that are foolish enough to continue to buy the newest version of the iPhone, which, let's face it, in America, in our consumer culture, there's definitely somebody out there that needs to buy the newest iPhone every year. So and I've heard that the iPhone 11 sales have actually been better than expected. So that's probably why Apple stock is up huge here. Again, another core position in my portfolio, one that I'm very comfortable owning, has a $1 trillion market cap. And just have had huge returns on this stock. We have Medical Properties Trust, another REIT there. I'm up on that position as well. And then we have Waste Management, a relatively newer position in my portfolio. Was trading at a little bit of a discount here, but still not a big enough pullback where I felt comfortable owning more shares. Down a little bit on this position, but this is a very recession-proof stock. That's kind of the reason why I bought it, because we'll always need a company out there to take care of our trash. Actually, also recently watched that Bill Gates documentary on Netflix. And I know Bill Gates owns a lot of waste management stock as well. Then we have Applied Materials. This is one that I don't think I've ever actually publicly revealed on my Robinhood portfolio updates, but I've owned this for quite some time. Only own 2 shares. This is another semiconductor company, but I was recently watching another YouTube video where Applied Materials, their CEO, was talking about the future and how they plan to be really involved in the AI and rise of automation and using robots for the workforce. And that really seemed to be something that kind of caught my eye, because I can really see how companies can make a lot of money off that. And I want to be investing in companies that are going to be catering to those needs. And Applied Materials is definitely doing a lot of research and development into that area. So I think I'm going to be buying a couple more shares of this, and we'll be holding it for the long term. I'm up on this position 16%, so that's not too bad. And they pay a very small dividend, but this is actually a company where I think that most of their capital needs to be going into R&D and not necessarily into my pockets. So then we also have Chubb, which is an insurance company, and I'm shocked that this stock has risen so much recently, up almost 10% on it. Then we have T-Mobile, one of the first stocks I've ever bought. Really buy it because of its dividend. That's why most people hold it. Close to 6%. I'm up on this position. Was down for the longest time, but glad to see T-Mobile go back there. Then we have Disney, which is trading at the lowest I've seen it in quite some time here. So down a lot recently here. It says that I'm down on the position, but I'm pretty confident that Disney will bounce right back up. Then we have Reality. No, just kidding. Reality Income here at $78. Again, pays a very nice dividend. And then Facebook, last stock that we'll be going over today at $180. Again, one of my most recent videos was me going over why I don't really like social media. And this is a stock I kind of want to sell out of, even though a lot of people anticipate a lot of growth with it. I would just rather own other companies that I'm more comfortable in their products and what they're serving to the consumers here. So, I understand a lot of people don't invest that way, but again, something like artificial intelligence, that's what I want to invest into, not social media companies. So let me know if you disagree with me. Let me know if you guys have any questions about what I'm planning on doing with the portfolio in the future, or why I might own a certain position, or if you guys want me to make a video on a certain topic, let me know in the comments. Again, really excited to see all the growth here. And I know this is a super long video, but if you guys stuck through it, be sure to hit that like button, and I'll catch you guys next time.